Thank you for that very kind introduction. I really appreciate it. So, so the idea of this session was the guys wanted me to come and... What did I do with the thing? Oh, here it is. The guys wanted me to come along and talk a little bit about open banking and share some of the experiences from the UK to sort of feed into the debates here about what open banking should look like. Some different mechanisms for arriving at more competition and then hopefully more innovation in the financial services space. And to look forward a little bit about what's going to happen. So what I thought I would do is do it in sort of three parts, really. So what I'm going to do first was I'm going to explain a little bit, just for one or two people, I just want to explain a little bit about why the UK is in this unusual situation at the moment with open banking. Then I'm going to talk a little bit about the bank strategic responses to that new open banking environment, and I'll illustrate it with one or two examples. And then I'm going to talk about why the whole thing might inadvertently turn out to be a complete catastrophe. And so we'll skip over this. Right. So to understand the UK situation, you have to understand that in the UK, open banking is the confluence of three different initiatives. I mean, everybody talks about PSD2, and yes, that's a, European, whatever. So, but I don't have to pretend anymore. So, but that's only part of the story, and that's not why the UK has turned into this very unusual sort of laboratory for open banking at the moment. It's actually because there's a perfect storm of three things that have come together to cause this. So PSD2 is the first one. So obviously we have the European Second Payment Services Directive. The Second Payment Services Directive includes a thing which has become called XS2A, which is their absurd abbreviation for access to all. And the crucial point about the XS2A is that you have AISP and PISP, API access with SCA 2FA according to the art. You're not writing this down. I'm baffled. Okay, so none of this matters, but the point is it means that third parties with the customer's permission can have access to the bank account, and the only thing you need to remember about it is there's two sorts of access, which are account information access and payment initiation access, as per Leila was talking about earlier on here. Now, the PSD2 itself does not specify APIs, or indeed doesn't even say you have to have APIs, but it's just that API is the only realistic way of implementing any of this stuff. And it does put some odd constraints on what you can do with those, but I mean, they're not sort of germane to the. So look, the point is there's PSD2, and so you have these two sorts of access to bank accounts, basically information and payment initiation. Now, meanwhile, while all this was going on in Europe, the government in the UK was very particularly pissed off with banks for being anti-competitive. And there was this sort of, because this had been going on for years with the Cruikshank report and all this sort of stuff. So for about a decade, they've been umming and ahhing about how to make the banking environment more competitive in the UK. They were particularly concerned about the concentration of banking services, actually particularly in the SME space around that as well. And there were various ideas of what to do about this, but one of the things that came along was, as a result of another open data initiative, this idea about the open banking working group and the idea that you would have this kind of standard format of data whereby you could export data from your bank account and give it to other people. So this was going along at the same time. And then meanwhile, along came the third storm, CMA, which is the Competition and Markets Authority. And so the Competition and Markets Authority finally said, right, we've had enough. We are fed up with the banks being, I don't think they actually used the word senile oligarchy, so I might be paraphrasing slightly. But we're fed up, and so we want something done about it. And so therefore, we're going to mandate open API access to bank accounts. Now remember, this was separate from what was going on with PSD2. So in a sane and rational world, you would imagine that the CMA APIs that are being developed in response to the Competition and Market Authority, what we call the remedies, because that was what they were called in the CMA paper. That these APIs will be the same as the PSD2 APIs, but of course there are no APIs in PSD2, and so random groups around Europe, we haven't got time to go into it all, are developing different sets of API, and essentially the whole thing's a bit of a mess, you don't need to worry about it. But in January, the CMA APIs went live, and they were supposed to go live with the 9 biggest banks. In fact, I think only 4 or 5 of them hit it at the time. But you know, generally speaking, in the UK right now, unlike anywhere else, you have non-contractual, mandatory third-party access to the biggest accounts, to the accounts of the biggest banks. So basically, anybody can come to me, and because I happen to be with Barclays, which is one of the 9 biggest, anybody can come to me and say, Dave, can I have a look at your bank account? And then I'll say yes, unspecified reasons I can't really think of at the moment, but I'm sure we'll come back in a while on what those might be. And there's nothing Barclays can do about it. They have to give them access. So that's where we are at the moment. So what's happened is, so we've turned into a little bit of a laboratory where we're experimenting with the APIs ahead of the introduction of the PSD2 APIs. We're experimenting with the open data formats and you know, and of course all this is problematic as well. And at the same time, we're beginning to learn about what it means to have open. Now I have to say, open banking as construed in the UK, which is mandatory API access to third parties, is not the only way of having more competition in the banking space. There were other choices that could have been made. So for example, you could have said, we will have some form of graduated regulation for the smaller banks so they don't have to be subject to full, or you could build on the European institutions of the payment institution and the electronic money institution. This is not the only way to get more competition in the sector, but you know, everyone was pissed off with the banks, everybody hates them for perfectly understandable reasons. You know, the UK taxpayers forked out billions and gazillions of quid for these hopelessly badly run comedy institutions, and we're still losing money on them now. So, you know, you wouldn't expect a particularly sympathetic hearing when they went up to Parliament. So, we have APIs in place. Well, yes, sort of, but this is the current, so basically the way we decided to do it was we had this thing called the Open Banking Implementation Entity, which the banks were forced to fund. And the Open Banking Implementation Entity sets the API standards and it has the work streams to get all this stuff done. This is the current, I just pulled it a couple of days ago, so this is the current work stream. So this is all the stuff that hasn't been done, which is underway right now. So it isn't just this snapshot, like in January, you turn on the APIs and that's the end of it. In January, you turn on the APIs and then you discover the whole thing's a lot more complicated than we thought in the first place. And of course, as people sit down and begin to use those APIs, they discover, well, hold on a second, this API is no good because it doesn't give us this data, or it takes the wrong kind, or blah, blah, blah. But whatever, you know, in the real world, to get this stuff sorted out is time-consuming and complicated. So just to show you, I don't think you can read these things, but just to sort of show you what's... Oh, is that a laser thing? Oh, I've mucked it up in some way. Oh, it doesn't matter. Oh, here we go. Just to show you what's going on. So, for example, even basic things like... actually, I'll pick one. Authentication. Just trying to work out how, you know, what authentication types will be allowed, how those will go with the PSD2 authentication, which has very restrictive rules about who can authenticate what and what the liability is. Basically, banks have all the liability. So just trying to align with those things is really complicated. And you know, there's a lot you can learn from on this sort of thing. But there's also stuff like the international payment right, which is the other end of the SWIFT stuff they were talking about there. Bulk payments, trusted benefit, reverse pay. Oh, gone wrong with this sort of thing now. It's far from being sorted out. And of course, the first few people that have started to write these APIs, or tried to write software that use these APIs, of course, have come up with a list as long as your arm of all the things that need fixing. And, you know, the banks, quite rightly, because they're on the hook for all the security, if all of this goes wrong, it's the banks that carry the can for it all. So you can understand them being cautious, but, you know, uncharitable people, I'm not one of them, but uncharitable people would say there might be a bit of foot dragging going on here as well, because the banks aren't overly excited about having to open up their data to third parties before they have a competitive strategy in place to do something about it. And because they've only known this was coming for about 7 years, there's no reason why they'd have a competitive strategy in place right now. So I'm not unsympathetic. But that's where we are. So the point is, this means a lot of change. I mean real change. Normally, you go to Cybos. I shouldn't pick on Cybos because Swift did, but that's just like my example of banking conference where I was bored to death, sitting through, and people would stand up on stage. We're going to do a radical transformation of payments because field 13 is going to change from 7 bits to 9 bits in 2027. You're too young, you don't remember this, but I can remember where. No, I can. See, I can remember when payments were boring, and you can't. So that's why I'm allowed to make that sort of joke. But the point is, those things weren't radical transformations of payments. This is one of the most radical transformations that you could possibly imagine. And one of the key reasons for that is because open banking means that payments become a sort of gateway whereby people get hold of the new opportunities and then take them away from the banks. It's like, look, a typical example of this sort of thing. So a typical example would be, I'm in QuickBooks or Xero or something like that, and I'm a small business, so I'm mucking around, moving money between accounts or whatever. And when I finish doing it, I have to come out, log into my stupid banking application, and then type in all the stuff from Xero that I've just been... Of course, none of us want to do that. What we want is, I give Xero permission to access my bank account. I go into Xero, I move some money between accounts, and it just gets done over at the bank. That's what we all want to happen. But the implication of that, as Chris Skinner made very clear yesterday, is that I don't go to the bank anymore. All my interaction for financial services is now through Xero. So as a consequence, banks who are trying to construct services for this new environment are no longer selling the services to me, they're selling the services to the app developers who are building those apps for those third parties. And that is a really different way to do business. And none of us really know how to do that yet. And he showed that. I mean, I love that example of Stripe. It was 9 lines of code and they made $200 billion trillion. And like every single bank said, God, we could have done that. It's 9. Yeah, you could have, but you didn't. And it's the same here. It's the same with this kind of thing. Someone's sitting in a garage who's coding up the stuff right now, which is going to make... So this is a really radical transformation. Please don't think of... I think one of the strategic mistakes some banks may have made is it's something to do with APIs, so therefore it's something to do with IT, so it's like a technical thing, so let the IT guys sort it out. They didn't understand the strategic context of this, and they didn't understand how what seem like boring technical decisions that are made down on the side of someone's desk actually constrain the strategic options for the business models that are going to be developed downstream. And leaving it to the IT people was a very bad mistake to make. But anyway, I mean, things generally are, aren't they? But anyway, the point is, it means a lot of change. And we need to spend a couple of minutes talking about what that change might be. So let's talk about what banks are going to do, okay? So I'll spare you the scare stories, but this is the Bank of England. You'd think the Bank of England would be sort of calm and collected, and the guy from the Bank of England said basically you're all doomed, essentially. I mean, I'm summarising it a little bit, but this is the Bank of England. This isn't some technological hype merchant like me telling you about it. This is the guy, Stability, from the Bank of England. And he says you're all buggered. And you have to listen to him, because he knows what he's talking about. So what can banks do? So let's imagine you're now in this environment where there's mandatory third-party access to your account data. What strategies can you adopt? Well, a super high-level breakdown of the strategies says, look, we have this very simple model of a bank, and the model of a bank is that we had the manufacturing of finance. I mean, you've all been through bank business school for this. right? So you've got the manufacturing factory bit and you've got the distribution bit, and we all understand that the return on equity in the distribution bit is much higher than the bit in the manufacturing bit. So the manufacturing bit is a volume business with lower margins, and there's a tendency to collaboration, and ultimately you'd expect consolidation in that space. Meanwhile, at the front end, you have higher return on equity, more people are attracted into that space, and you would think more variety in that space opening up. And what's happened to disrupt this is in the middle, you've now got this new previously unseen function. I called it the packaging function because I couldn't think of a better word, where you've now got this API layer between the two, so the two things can split apart quite trivially. And so the question is, what strategic responses can banks make in return to that? So that's my sort of model formulation of how we can look at those strategies. And you'll see that the technological impact of this is sort of in three parts. So at the front end, it's all about apps and user experience and stuff that I don't really know anything about, but I know it's important. In the middle, it's all to do with APIs and tokenization, which I do know about, and I know that's important. And at the bottom, it's all to do with AI and machine, because the only way to get the cost down doing that stuff in volume is AI, machine learning. We all know that stuff. It's clouds and lots of data and whatever. So we don't need to go into it, but you know roughly what's going on in that sort of area. That gives us three categories of bank response at the strategic level. So the banks can basically say, okay, we're going to carry on doing all three of these things. We're going to do manufacturing, packaging, and distribution. This is what people call the Amazonization strategy. Not because the banks are going to be led by gigantic women armed with all sorts of spears and bows and things, but because Amazon was the first company that opted for this strategy of making everything produced and consumed through APIs. So this is the strategy which says we keep the legacy bank integrated as it is, but we move to an API-based infrastructure. This is like the FIDOR model, because the API-based infrastructure gives us a more efficient, it gives us a more flexible model, it gives us a new way to introduce new products and services and blah, blah, blah. It's generally a better way of running things. And you'd expect to see the bigger banks like Barclays go down that route. They'll carry on doing those things, but they'll use the API to create an Amazonization strategy to make themselves more efficient. Then on the other hand, you've got the platform strategy, which says we'll concentrate on the manufacturing, but we'll build a platform above that, an API marketplace. This is what you see people like Starling doing. So you go the Stripe route, you make it as easy as possible for the developers out there. You don't target the end customers anymore, you target the app developers, you get them to get a momentum around what you're doing, and you provide the basic APIs that you have to provide because of CMA, PSD2, but then you provide the extra APIs that give them extra service, that mean they want to come to your bank to do these things rather than other people. You see like Nordea doing this with FX and stuff like that. And then the third possibility is the aggregator play, where you take the front-end distribution and you let other people do the manufacturing wherever possible. So you see all three of these growing up at the moment. Now that aggregator play, remember, remember the ROE is concentrated on the distribution layer, so the aggregator play is going to be attractive to people who are not just banks. So people who aren't banks are going to be looking at that play as well, right? Because they can provide the distribution service better than you can, and they actually don't want the manufacturing, because the manufacturing, from their point of view, is nothing but hassle. It's where all the regulation lies, it's where the low margin lies, so they're happy to leave you doing that, and they'll pick up the aggregation and the front-end distribution. Now, I mean, of course, banks are trying all of these things. So you got, for example, one of my favorite examples, HSBC has launched HSBC Connected, which is the aggregation play, so you can log into your HSBC app and you can see your other bank accounts. Rather amusingly, none of the APIs work, so it's all done through screen scraping. So they're even screen scraping their own website, because it's easier to screen scrape your own website than to get the APIs sorted out with the IT people downstairs. So but it's the times we live in, isn't it? Anyway, so those are the basic plays. So this is the UK open banking platform that they're building those plays on. This is the strategy which I think most of them should adopt. I make very clear, this is not the strategy they're adopting. This is the strategy I think they should adopt. Because if you adopt a strategy which is based on the APIs, you're not going to make a living out of it, because everyone else is providing the same APIs. That's a commoditized base. If you can come up with some fantastic special APIs that will make some money, good luck. Go for it, right? But it's actually quite hard, because everyone's got to provide the same APIs. So you've got to think, what can you provide into those APIs which has actually got some value, which will keep banks in the transactional loop when other people come along and do that aggregation function themselves? My argument would be that's where digital identity comes to play. Identity is the thing that the bank has actually got, right? The people that actually know that I'm a person is the bank. The people that actually know I'm over 18, resident in the UK, it's the bank. The bank knows all of this stuff. So it should be the bank that's providing that into this space. And I rather like this Accenture formulation. They say, well, what about the bank as a digital relationship manager? And I quite like that. Because that means what the bank is doing, the bank is looking after my identity, my reputation, my personal data. Remember, data is the new oil, but personal data is the new toxic waste. Nobody wants that stuff. You want to keep it locked up in the bank. You don't want to smear it around all over the place. And that means the bank plays a part in all of my relationships. Chris told you yesterday, one of the problems with the banking model we see emerging now is that banks lose control because all you see on the bank statement is Monzo, 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 Alipay, 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 WeChat, WeChat, WeChat. You've no idea what customers are doing anymore. That's true on the payment side, but it's not true on the identity side. If you're the person who knows who the customer is, who can vouch for them in whatever circumstances are necessary to enable a transaction, then you stay part of the transaction, whether it involves your stupid legacy payment systems or not. You're still part of the transaction. So that's a good goal to aim for. Right. So, the key points so far. Open banking already exists. It's all a bit of a mess. We've had some fun playing around with it, and we can see that some new strategies are needed. But, you know, that's basic stuff. The problem is, it's all going wrong. And as Nadine was kind enough to say, these consequences were only unexpected to people that didn't read my article about it last year. I know I am an arsehole. I'm not this much of an arsehole in real life. It's just conference persona, you know, it's have to. So the point is, when we were doing strategy work for banks a couple of years ago, because you know I'm playing that sort of consultant game on social media, where if I say as a throwaway comment on social media, oh, I don't think that's a good, you know that's because a year ago I was working on it for a client for 6 months to try and figure out the way around the strategy. So this stuff looks like casual throwaway nonsense. I can assure you there's a much more sinister and Machiavellian undertone to my tweeting and LinkedIn stuff about this. Here's the problem. The problem is the bank has to open up its data to third parties. And I can tell you who those third parties are going to be. It's not going to be the 1,000 flowers blooming in the fintech garages up and down the country that the regulators wanted. This is the deranged European Union thing. We open up the banking data and children throughout the land will rejoice and begin to experiment, and they'll create new products and services. And of course, that's not what's going to happen. What's going to happen is I'm going to get an email from Amazon which says, hey, Dave, next time you buy something from Amazon, there's no need to bother let's not bother Visa and MasterCard. They're so busy with all those transactions. Why don't you just let us get the money from your bank account? And by the way, if you do that, you'll get an extra month Prime. And I'll say, okay, as will everybody else. And the next time I buy something on Amazon, to me, it will look like a debit product. I don't need any education. I press the Amazon buy button, the money comes out of my bank account. I'm fine, it all works. The fact it's going over NPP or some other push instant credit infrastructure is never going anywhere near the existing card rails. I don't care, because I'm a customer. But of course, Amazon now has all my transactions. Amazon has AISP access to my bank account. So a couple of nanoseconds after Facebook gets access to your bank account, they'll have a quick look through everything. They'll feed it into their giant machine learning killer robot supercomputer that you lot haven't got. And it'll come back and say, hey, Dave, do you know you're paying too much for that overdraft? Why don't you have Facebook overdraft instead? Now, if you think I'm making that up, I have to tell you this has already happened in the UK. Because last year, Admiral Insurance tried an experiment whereby if customers gave access to their Facebook accounts, they would potentially give you a better insurance deal, right? I don't know quite how it was. The idea was they log into your Facebook. If there's pictures of you grinning over wrecked cars and driving with a bottle of Jack Daniels in your hand, your insurance rate goes up, right? And if you're driving your mother to church on a Sunday, your insurance rate goes down. I don't know quite how they were going to do it. Amazon blocked it. Amazon blocked it. So can you see the problem? Which is now, sorry, not Amazon blocked it, Facebook blocked it. Amazon, Google, Facebook, they have access to your customer data. You don't have access to their data. There's a crippling asymmetry at the heart of this, which is going to cause nothing but grief unless the regulators get hold of it at a different level. Now, when I said this, no one pays any attention. They never do. I live with this, right? I explain all of this. No one pays any attention. Anna Botting, just because she's the executive chairman of Santander, right? When Anna says it, all of a sudden it's a big deal. You know, we've got to do something about it, and it's in the Financial Times. But she's right. She's right. Unless the regulators do something more intelligent about open banking than just making the banks open up the data, all they're doing is replacing one senile oligarchy with another uncharitable people, I'm not one of them, would call them, sinister, monopolistic, potentially malevolent, anti-competitive, post-industrial data monopolies. Is that what you wanted, regulators? Come on, is that what you really wanted? I don't think so. So what are you going to do about it? So in the EU, I'm not saying you're going to make the same mistake. You won't. You've got more enlightened regulators. Anna's already told you about it. I told you about it too, but whatever. In the EU, we've constructed an open banking infrastructure, which means asymmetric warfare, which means that the super platforms get all the banking data, the banks don't get any of the platform data. And the only possible strategic outcome of that is the banks are relegated to the role of heavily regulated, low margin, volume pipes for executing the transactions that are fed in at the distribution layer. That's the only outcome of this. What do you think? I'm in Facebook, and I'm messing around in Facebook, and I send my mate 20 quid I owe him, and then I realise, oh, I've gone overdrawn. And then Facebook says, oh, you've gone a bit overdrawn. We can see. Would you like a loan for the next? Yeah, okay. I'm not going to come out of Facebook and run some bank thing. Let's go, all right, okay. And if I go to page 200 of the agreement that Facebook send me and read the small print, I'll probably discover that loan actually comes from Goldman Sachs. It doesn't come from Facebook. Of course not. They don't want to take credit risk. The money actually comes from Goldman Sachs. I don't care. I'm a customer. I needed 50 quid. Facebook gave it to me. Sorted. What you're going to do with all those bank branches and mainframes, I have no idea, because this stuff's never going to go near you. You're going to get the stuff auctioned to you like the advertisers do. Like when you pull up a Facebook page on your mobile phone, right? If I pull up a page on my phone right now, Facebook goes out to its advertising pool and says, well, we've got, you know, boring old grey-haired bloke, you know, he's in New Zealand, he's bored, pull it up. What adverts do you want to show him? And in 20 milliseconds, that slot gets auctioned, the advert gets loaded, and it comes up on my page. That's where you're going to be. It'll be, well, we've got this bloke, he needs 50 quid, who's got the best bid for providing him with the money? And by the way, it'll be Goldman Sachs, not you, because you've got branches and all that other stuff, which is going to cost a waste of money. So I don't want to moan, I want to plant one positive suggestion with you, because I want to show you that there are some ways forward. There's a superb book by a guy called Scott Galloway. He wrote this book called The Four, about the monopoly that's being delivered into the marketplace by, I mean, he picked on Amazon, and you could just as easily pick on Baidu, Apple, Tencent, it doesn't matter. And he said, look, at the end of the 19th century, we had to break up Standard Oil and US Steel. At the end of the 20th century, we had to break up AT&T. You have to break these monopolies up in order to save capitalism. And he said the same's true of these guys. We need to break up Google. We need to separate, pull out YouTube. We need to break up Facebook, pull out Instagram. But there's another possibility. What if, instead of breaking up those monopolies, what if instead we open them up? So Anna said, one way to make the situation more symmetrical is if you took anybody that's got 50,000, 100,000 customer accounts, anybody, why not make the same rules apply? Why single out the banks? Why shouldn't anybody that has customer data have to provide these open APIs so that third parties can get access to the data? If you're a competitor to Facebook or Google right now, you haven't got a prayer. The regulatory moat that we've erected around them, including GDPR, I have to say, is insurmountable. You can't go into business against Facebook. But instead of breaking it up, what if we opened it up? What if we went for not just open banking, but open everything? What if Facebook could look at your banking data, but your bank could look at your Facebook data, and everybody could compete to try and provide the better products and services that people need? So, in summary, there's lots of different ways of doing open banking. You don't have to do it the way we did it. If you do it the way we did it, you probably want to think through the APIs and stuff a little bit more. And like, none of this stuff's thought through. Look, I'll give you one super quick example, right? By the way, if we want to make some money, this could be the way to do it, right? So what we do is, you see, I go to Katrina and I ask for permission to access Katrina's bank account, and she says okay. So I download all of her bank data, and it turns out that she was sending money to Layla. But Katrina has given me consent under GDPR to access that data, but Layla hasn't given me consent to access her data. And that means the bank will get fined 4% of GDPR, 4% of global revenues under GDPR. So what we do is like you throw your car keys in, right? We all give each other permission to access each other's bank accounts, and then we tell the bank, unless you give us $1 billion, we're going to read it, right? And that way, no, get the emergency on-call lawyer in and fault my logic. I've just given you a retirement plan to end all retirement plans. You don't get that with every talk, I have to say. You don't have to implement it the same way that we did, but if you do implement it the same way as we did it, then the regulators need to think a little bit more about the competition outcomes of open banking. Thanks very much for listening.